are. Paid growth. How's everyone doing in the chat? Long day, but we're just getting more and more fired up as the day goes. Where are we at? If people are like in the 4s or 5s out of 10, maybe do a couple of those breathing exercises that Robbie did in the morning session to get us get a little blood back in your brain. Maybe stand up, do a little stretching before this one, because we've got two really cool paid performance marketers here who both have like really great experience and are going to really dive into a lot of the nuances of performance and paid marketing. And we were joking backstage too. The SEO guys were like, "Oh yeah, don't worry about SEO, just get into paid." and then Simon was like, "Well, we feel the same way. We'd rather be doing content." Sweet. Without further ado, I'll introduce the two people you see on stage here. We've got Jesse Pujji, who is the founder of Gateway X, which is a group that invests in and grows D2C brands like Burrow, Candid, and Tavala. He recently shares his performance and D2C knowledge on Twitter. He also runs a podcast in partnership with Patrick O'Shaughnessy. It's called Startup. Sorry, I can't remember the name of that one.
Business Breakdowns.
So paid acquisition is only one small part of Jesse's massive brain that he uses. There's so much cool stuff on those podcasts, so definitely check those out as well. We've also got Simon Lejeune, who is the Senior Director of User Acquisition at Wealthsimple, which offers a suite of financial tools for spending, saving, and investing. And we'll dive into like how that product has completely exploded in the last 3 years and how he's acquiring people on all those channels. But he's previously has deployed millions of dollars across all acquisition channels in his current role, and previously was head of user acquisition at Hopper. Welcome. I'm pretty excited to chat with Simon too, because I am in Canada. And so like Wealthsimple, I'll let you explain, Simon, but is the equivalent sort of Wealthfront. And so once people kind of like get into a product like that, you just like become addicted to kind of like money. I think would be an interesting industry to play in, because like people, it's like the best hook ever is like, are you making money or not? What's that like, Jesse? Or Simon, sorry.
Yeah. We started out as a Wealthfront or Betterment for Canada. And we were pretty successful since we started in 2014. Then I guess the founders decided, well, why not be also the Robinhood of Canada, or the Coinbase of Canada, or the Cash App of Canada, because it's kind of a big market, but not that big versus the US. Or as a secondary market, a lot of these US companies want to go to the UK, and there's pretty hefty regulations around investing in Canada. And so we've been able to expand to these like self-serve trading app, the crypto app, the tax app, the cash app. A little bit of everything.
Yeah, it's as a customer, it's definitely you've got a pretty good handle on like all the things that people care about.
Yeah, and it's interesting related to paid performance and performance marketing, because the Wealthfront, the product, so the robo-advisor, is really hard to make work with performance marketing, because kind of crazy to move all your savings into a brand that you've never heard of just right after clicking an ad on Facebook, versus a trading app like Robinhood or Wealthsimple Trade, where you can start with $1. You can there are no minimums, fractional shares, make it really, really easy to start. So that was when like it really clicked, and they started with brand marketing on the Wealthsimple Invest side, and really, really started to do paid performance when we did Wealthsimple trades like Robinhood.
Cool. We'll come back to like all the people in the comment are mentioning like the hook methodology and like some of the product-led tactics that Wealthsimple products use. We had Nir Ayal on here last night, and he kind of blew our minds with like how quickly you can get people using your product, but we'll get there in a sec. Jesse, I want to hear from your perspective, because in your position, you're both like investing in and operating a lot of businesses. So some of them, I assume, use paid marketing and some probably don't. But curious to hear what your kind of like audit process looks like as you are looking at investment or deciding whether you want to get involved in a project with another company, what does your audit process look like of kind of the acquisition channels of any of your investments?
Yeah, it's a great question. When we look at things, both stuff that we're building, because we're incubating a bunch of companies as well as what we're investing in, we're trying to find a path to superior economics when it comes to paid acquisition. And so what does that actually mean? Like, for a long time, and even still, like the idea was, well, like some arbitrary 3-to-1 LTV to CAC and then grow. And I think we've seen lots of examples where if that's what you're doing, at some point that growth will peter out and it won't make a ton of sense and it won't try to scale. So we look for things that have, that don't think of, first of all, don't think of the world that way. And instead they think of it as either they have a really high number there, like 5-to-1, or the best companies think of it as they're constantly improving that number and constantly getting better. So that the way they think about building in growth and managing it is it's not a fixed number, but it's a number that keeps getting better consistently. And they've built the inputs and the sort of activities and actions and the culture of continuing to improve those numbers over time, right? And so that's
that number. Sorry, and that number, before we keep going, is the ratio of the lifetime value over cost of acquisition. Is that right?
I mean, that's one. You could pick any of them. ROAS. Okay. It doesn't really matter. But I think what happened a long time ago was people started building businesses around arbitrary goals. And goals are this funny thing where, like, they are pretty fundamentally arbitrary. I mean, you said everyone just came from an organic session. This is the paid session. Like, in my experience as a leader and CEO, if I tell my team to go get 3-to-1 LTV CAC or 4-to-1 LTV CAC, both are achievable. They're just going to do different things. And if they do 4-to-1, they might need more email and SEO and a little bit less paid, or, and so it really, the idea of an arbitrary goal is a very dangerous thing in my opinion. And so I look for companies that have this mentality around, we have these levers, we want to pull them as best we can, and we want to keep getting better and keep measuring ourselves and iterating. And then when we look at investments, I think we spend a lot of time on unit economics, because things that have high margins, they just tend to perform better in our experience and things that we've seen. And then we spend a lot of time trying to understand, like, are they squeezing the orange really hard and all the juice is gone and that's it? Or like, have they barely even juiced the orange? And when we feel like we're like, wow, they've barely even juiced the orange, they're already seeing pretty good performance, that's when we get really excited for obvious reasons.
That kind of sounds like what Simon just mentioned with like the product realizing, like, oh, we've been playing growth on hard mode because we chose like the hardest area of wealth management to go into and start with. But I mean, like you said, there are regulations, so that maybe was the wedge that allowed them to get the trust with whoever that needed them to allow that to happen, right?
Sure.
Yeah. And I want to rebound for a second on what Jesse was saying. It's actually my favorite interview question when I hire for kind of a senior user acquisition manager, is like, how do you set your payback period? And people kind of struggle with that question because they're like, well, we use 12 months or we use 24 months. I'm like, yeah, but that decision there is a business decision that, like, you have to figure out, is your business very predictable? How much risk do we have in your revenue projections? What stage are we in, like a growth mode or profitability mode, etc., right? And it's not like the classic data-driven answers that user acquisition folks are looking for. So it's kind of a telling question on folks' strategic mindset.
I mean, 6 years ago, we put a gaming company out of business because their LTV calculations were far out and wrong. And they were acquiring customers and they literally went out of business because they thought their 12-month LTV was going to be X, and it turns out it wasn't. And I always tell people now, just focus on payback period and be conservative around payback period.
Mm-hmm. Yeah, and if you look at Uber, they were factoring in like driverless cars in their 5 years LTV, and maybe it's another 5 years before we see that. And for us, like Wealthsimple Trade, I started about a year ago. We were spending 100, 200K a month in paid ads because they were not really doing paid ads. It didn't work for Wealthsimple Invest. And for me, I was like, this is not an orange. It's like this huge watermelon because it's the perfect storm of like great brand, high demand and the product that was geared for performance, and we scaled up to 6-7 million in a month just in paid media in 2 or 3 months, from like 100K to 6-7 million. So it's crazy. And we also kind of were a little bit worried because January was this crazy meme stock month where we had a ton of users who traded a lot. So there was a lot of trading activity, lots of revenue, and then you start projecting revenue on their best performing months ever, and then you're like, oh, nice, my CAC goal is like $500, but turns out, I don't know if you saw Robinhood's Q3 earnings, but trading activity went down quite a bit in Q3, and so you have to take that into account when you set your payback goals, like how confident am I in my revenue projection? And if you're a trading app, you can't be, because like if you could be predicting trading volume, you would be, or which is based on volatility, you would be betting on those VIX index or volatility index and making way more money than like trying to make Facebook ads.
What are you allowed to share what your payback period is?
Yeah, sure. But again, it's not what it is, it's what we decided to be. Right now, we look at like a blended 1-year payback period because we've been in business with the Wealthsimple trade app for a year and a half or so. And we want to be slightly conservative in terms of projecting our revenue for the next year. So it's kind of where we landed. But yeah.
Jesse, do you have any advice when you're helping out founders figure out what their payback period, like any questions that you should be asking them so that they can set their goals and be realistic?
I mean, the businesses we're building, I aspire for like same month payback. That's like, to me, why would you not start by having that conversation? Like, why would you not go, what would have to be true for you to be first order profitable or first sign up profitable? Can you run a promo? Can you sell an annual plan? Like, to me, I would work backwards from that, and I would test and try things until then I go, oh yeah, there is actually a good reason. And the reason is X. The reason is my customer wants to try this thing. The reason is whatever. And then I think from there, it's like there obviously growth. There is a tension between growth and and economics. But oftentimes I find that people haven't thought hard enough about that. And I've said this before on Twitter and stuff, is like people make a false dichotomy. It's like it can either grow or it can be profitable. And there's actually a ton of overlap. If you look at most initiatives where there's ones that you can grow that are also profitable at the same time. And if you have limited hours in the day anyway, you might as well choose the initiatives where both of those things can happen simultaneously, and not just one or the other. And so, I'll spend time on the tactics and the things with someone and try to challenge the thinking around, people get constrained very easily in this thinking of like, we can either go for the thing that grows, but it's not making money, or we can, and one example of that, that challenges that thought process is like, will change the game for any growth marketer out there or founder out there. Because they thought that gravity worked this way, and all of a sudden you go, you can jump and you can float for a second, and then all of a sudden they go, okay, how do I do more of that? Like this happened many years ago. I'm sure everyone's familiar with this, but like the quiz, which is like ubiquitous now on Shopify and everywhere. Take the quiz. Like that was an example of that in growth 3 years ago, where as soon as people started using it, it changed the way conversion, it changed the way click through, like it changed the way that the math on it worked. Video is similar. Like these things where you say, oh, all of a sudden the rules of the game change. I think is where I try to focus people's attention and energy.
Yeah. Like, would the equivalent right now of that be, I'm curious from your perspective, is there anything that's ongoing right now that feels to have that severity of like, oh shit, everything's about to change? Like, to me, like the thing that comes to mind maybe is influencer, maybe is like social selling, like if that takes off in North America and like having it kind of like sales happening through social media and stuff like that. Like any of those feel relevant to you?
Yeah, I mean, influencer is definitely in that category. Although I'd say it's like in the 5th or 6th inning. It's not like in the 1st inning anymore. Yeah. I'll give you a weird one, which I still think email is way under levered in terms of being something that shifts the curve in a meaningful way. Email is just, man, it's an SMS. By the way, SMS more so because SMS is still relatively under leveraged. Mm-hmm. And then we're betting on a couple things we're building internally on TikTok. And not that I can tell you we've done anything that interesting yet on it. Like we haven't seen it, but I'm looking at it. I'm looking at the scale. I'm looking at how it works, and I'm going, man, this seems like an interesting place to be betting right now.
Yeah. Like, is that like a content play, or is that more of like a
no, like we're
promotion?
launching a brand, and we've forcibly said for the first 10 weeks, we're not going to do anything on Facebook, Instagram, nothing. We're going to force ourselves to launch this brand on TikTok. Partly because with the kind of the holding company model, we think that whether we're right or wrong about the brand or whatever, we'll learn a ton in that process. But we think we think there's a unique opportunity there. So we'll see.
Love it. Are you guys trying TikTok at all, Simon?
Yeah, I'm really, really bullish on TikTok. I always have been since like we got a law listed to get on the ads, and we made it work at Hopper, made it work at Wealthsimple. It's even better because there's so much like financial content and like a lot of crap advice too around investing that we work with like personal finance influencers, kind of help them create useful content that we use as our ads. That's the TikTok playbook, and that works really, really well. And I think like to your question, which is like anything big coming up, or like I was asked to provide like some trends for 2022 in user acquisition in paid, and the first one is around attribution and incrementality, and like maybe we can talk about that, but I feel like I talk about that all the time these days. But just TikTok as a creative trend, like TikTok is already crazy. Like it's not new, but I think it's gonna get even bigger. It's like the duopoly of Facebook and Google is slowly feeling like it's soon gonna be what's it called, like a triumvirate or something.
Yeah.
And because TikTok's gonna get to their scale, and then I was remembering like the favorite line of the TikTok reps is "Don't make ads, make TikToks," which is very simple but actually brilliant. Like, and everyone has been saying that, trying to make more native content, make UGC, and they said it like, don't make ads, make TikTok. It's like really catchy. It's like kudos.
It's a great punchline for sure.
Yeah, great punchline, and that's where the ads creative trend is going. And what I'm seeing is like everyone has embraced the UGC format, and you hit up influencer, ask them like, hey, get your phone, like talk about my product, but use your background, use your tone or whatever, and these ads outperform your branded ads. But I think like now like everyone's doing it. It still feels like cheap infomercial. And what I'm seeing the cutting edge brands do is like leaning into the entertainment side of influencers and creators. So I was looking at Cash App ads, and their best performing one on Snapchat is they went to see this super famous freestyle rapper and said, hey, can you make a freestyle about all these value props for app? Or they went to see, the YouTube stunts where two kids go in a supermarket and they use like a cash card to pay for someone's grocery. And it's like, or people like in street interviews, or so the shit you see on their YouTube channels, but you integrate your brand to it and then even use that as your ad versus asking them to create a script for your brand. That's what I'm thinking about for the next few years for creatives.
This really brings back a lot of the conversation we had yesterday on the direct-to-consumer session with Nick Sharma and Sean Puri and Ben Grinnell, where they were talking about like some of the best performing campaigns they've done, or like maybe not campaigns, but like a single asset that they had was like a native piece of content that was really well done and like it was designed well. It wasn't like they just found something like, I mean, the testing went into it, but they had a piece of content that told a really good branded story, but also mentioned the product enough as like part of the story that it was obvious that what the product is. And then they put a whole bunch of effort towards paid ads towards that piece of content. Like it wasn't like they were just putting an ad, like an ad's going to perform like an ad performs in the feed, but they made the promo, go check out this piece of branded content. And then, so you got to tell the story, and then it had really high conversion. Have either of you found success in some like a similar tactic to that?
Go ahead.
We've seen a lot of success with like the content advertorial. That was like another interesting, similar in the same bucket as quiz or influencer. The best example is we were working with a lot of these fresh dog food things, and we, someone in the team researched an article and wrote about the FDA like saying which dog foods are human grade and which are not. It was just like a total third party article, and we started putting paid media behind it. And not only was the CPA really good, but the thing went totally viral. Like it got shared 20,000 times. And so that's not exactly what you're talking about, but like this idea of, I think the general notion of like not being limited to a paid ad that says, "Hi, I'm a brand. Here's my brand. Buy it," with a model, to then a landing page. Like one of the for the first 5 or 6 years of Ampush, we were really early to Facebook. And the whole team was like quants and math people, because like we could basically outbid and outsmart Facebook. As soon as their algo got smart enough that wasn't possible, we're like, we need to hire like creative people. We need to hire people who think of crazy ideas, because the name of the game changed quite dramatically. And I'd say that's like a good takeaway for anyone out there running growth or thinking about growth.
Mm.
Yeah, and a rule of thumb that I try to apply, that's a little bit against what you were just saying, but like I've never honestly run a test where adding a step did better than like directing direct to the app store or to the product page. And I think it's possible. And I know it's possible. For example, for sponsored content, Taboola and Outbrain, if you look at what the Blinkist team has been doing, they've been really, really good and super optimize your landing page. So it's like, learn language in 5 minutes or whatever, and then you land on content then on the app store. And I try to do the same, like how to book cheap flights for Hopper, but sending people to the app store always was beating like writing content. But if the content, having content in between, but if the content is really amazing and compelling, I'm sure that could work. And
that's a cool idea of like having that extra step. Like, yes, it makes the branded stuff look nicer, but it probably like that's a friction, right?
Yeah, in a lot of cases. Another way we've done interesting stuff there is like we were seeing a lot of installs coming from TikTok creators saying like, "Hey, here's my travel hack. I use this app called Hopper, blah blah blah." And so you go to content that's already viral and talking about your brand, and then just like asked to use it as an ad or to recreate an ad, because we knew that girl, somehow the combination of how she was talking and the filter she was using was already viral organically, and then just like copy pasting the concept for your paid ads.
Gotcha.
For our paid ads performed really well.
A lot of people in the audience might be kind of like the only marketer or the only like founder who's in charge of marketing or something like that, and they're trying to figure out like if paid is a channel that they should be going into. What would be your first kind of like 2 or 3 steps if you were the first marketing hire and the company you knew that paid was like the channel that aligns well with your business model and your product and everything like that? Like paid makes sense. What would be, if you were the founder, actually, let's do it from the founder's edge. How would you build a paid team around you, or would you outsource it? Or like curious about what your thoughts are there.
Yeah. I actually think I wrote a thread about this yesterday on Twitter. I think if you're assuming, in your question, I'm assuming you're saying they're not spending anything on paid. They're just launching. They're just getting off the ground.
Yeah. Let's assume.
The biggest mistake that I see, Stuart, is like founders will either build a software product or a D2C product, and man, the care and love they put into it, it's amazing. They think of every angle, how the bottle should be designed, why it's unique to the other things in the market. And then they call me or someone else and go, "Hey, like, can you market this as an agency? Like, can somebody handle this thing?" And I'm like, what I tell them is like, part of your disrupting this industry is also the marketing facet, and just as much time and energy and focus as you put on developing the product, you need to spend that on the marketing for it to be successful. So my rule of thumb is 50%, at least 50% of one of the founders' time. Probably like a 50+% consultant who knows all the gobbledygook of lookalikes and how to structure all the audiences and whatever it is. And then a designer, like 50% of a designer. And that team, and there's just a rigor and iteration of like, let's try this headline. And it's, by the way, the other thing I tell founders, it's such a great source of learning about your customers. What headlines do they resonate with? When do they write comments that say this sucks? Like what actually is happening? And the idea that you can get you would want to ever be far away from that early on, to me seems suboptimal. And so I always say, no, stay really close to it every day. What's working? What didn't work? Let's pause that. Let's try this instead. Like there's a really iterative process, and it's about a 90 to 180 day process in my experience per channel. So if you want to crack the code on Google Paid, you want to crack the code on Facebook Paid, it requires that level of depth and iteration to get it to work sort of economically positively, or decide it's not working for now and move on to something different. And then the other thing I would think a lot about is what channel do you start on, and that depends a lot on your product. Like there's products that are way better to start on search, some that are way better on Google Shopping, some that are way better on Facebook. Like there's a whole thought process there that I wouldn't overthink it, but you ultimately, to me, want to pick one. That's another big mistake I'll see is like, I'll talk to someone who's spending 10 grand a month and they'll be like, yeah, I have 6 channels lit up. And I'm going, how do you even have time to log into all of those places, much less get one optimized?
Yeah. I mean, like, obviously it's going to be really tricky to like go down the list of every single product or business model that makes sense for each channel. But like, what is that quick thought process of like, is this the right channel for me? Is there any gut check that you should be taking?
Yeah, I mean, I think if you read enough out there, like, what is the customer looking for something, or is this something that they wouldn't be looking for? If they're looking for something, usually financial services products or travel or whatever, like search, right? Like they're going to be searching something, and is your brand distinctive? Will you have brand search? That's another question. And then Facebook tends to be those things where it's like, impulsive and or things that may take a longer sales cycle that they're not necessarily looking for. That would be my, I mean, there's probably a million ways that's wrong and nuance there, but like that's like the high level framework I would give.
I also want to draw attention to what you said about the founder, 50% of one of the founders' times spent in ads. Like, are you talking about them? If they know nothing about ads, this is their chance to like learn it. Plus get the insights from it.
I say that to founders and their faces drop. They're like, what? I need to become a Facebook expert. And I say, look, not a bad idea. It can't hurt you in your life. You're 26 years old and you're going to live for, hopefully for a long time. Wouldn't be the worst thing for you to learn Facebook ads, right? But I don't think you have to learn them. But I do think, I call it the who, what, when, where, how. Like, who am I showing this ad to? What am I saying to them? When and how am I showing it to them? So you don't need to understand the nuance of OCPM at the budget level, ad set budget versus bid budget or whatever, right? Like you don't need to know it at that level of granularity, or a person does that you're working with, but you don't. But you do want to understand which image is getting a lot of engagement and which one has a higher click-through rate and why is that? And okay, now let's try this instead of this. And so there is an element you want to know that that requires a certain level of engagement, rigor, and problem solving that oftentimes most founders think they can just hand off to someone else. And by the way, that works 2 out of 10 times in my experience. Like sometimes the product is so good that some agency can just figure it out, but most often it does not work.
Yeah, that's really useful. So that's not like the pure startup phase. Simon, can you chime in on like what your kind of channels look like now? At how many employees are at Wealthsimple now? Like
maybe 1,000, still under 1,000 now.
Okay, so quite large at this point. Like what does your kind of org chart look like in terms of like, does each channel get their own manager, or how does that look like?
That's a kind of a long-lasting debate whether you should structure the team by channel, or I rather have structure my teams around verticals or products and do like the single-threaded ownership that is popularized by Amazon and say, okay, you're responsible for new crypto clients. You're responsible for new Wealthsimple cash clients. Because I feel like ultimately a growth manager is able to figure out any channel if they understand the unit economics, they understand they all work the same, right? It's like campaign ad set ads. Maybe you're a little better at search because you have more experience, or you're a more creative person and you're better at Facebook or TikTok. But no, I don't want people to be channel specialists. I think search and SEO is actually maybe one where I have like a more horizontal ownership across different products. But I'd rather have people feel so that people are not affiliated to a channel, because if the channel stops working, I don't want for them to waste their time in the channel. And so they also have no constraints. So right now, for example, Wealthsimple Trade, we've we're spending massive amounts of money, and like we see obviously diminishing returns. And so I'm like, okay, what do we do now? To my trade person, she's like, I don't know, maybe like throw some student events where people have to download the app to get free beer or pizza. Like, so it's like you just help people think more creatively if you don't put them in a channel box. In terms of our mix, it's like 90% mobile. So intuitively, you would start with search. I agree. It's like, okay, trading app or best brokerage in Canada or something like that. I think that's the first channel I also recommend to friends who launch a new business. It's like, go after the super high intent, low funnel keywords with your first $1,000, and see if those people will like your product and convert. Because if they don't, like, Facebook is probably not going to work. But search is like very limited. Like for us, we can spend 5% of our budget goes to search, but then I can't create the keyword volume, and I have
you
to,
can't you can't make more people search for that thing.
Yeah, like right now,
or can you?
Or can you? Yeah, for sure. If you if you live full circle.
If you have something to say, please share.
We've done some experiments where we've actually said in the creative search X to get a discount, or search Y to get a discount, and it's worked. I mean, it's like, this is kind of a hacky tactical thing, but
but makes me think like TripAdvisor.
I generally agree with it.
TripAdvisor, they were all about SEO, right? But in their TV ads, instead of saying go to tripadvisor.com, they were like the Google search box and like search TripAdvisor. And the reason they were doing that was to increase their number of branded search on Google to increase their SEO, which I thought was pretty clever.
And kind of like consumer behavior, like priming them to like when you go search for a trip, go to Google and then go to us first. Cool.
But yeah, outside of that, now for us, it's mostly Facebook, Instagram, TikTok, Snapchat, Twitter, Reddit, and then Google App Campaigns, Apple Search Ads.
Do you do your creative in-house? Like, do you have a creative team that's doing the visual assets, or do you outsource that?
So we do everything in-house. We tried 2 or 3 agencies. It just didn't work. I had to scale up the creative team with the brand team to help me, but it was a real struggle for us, because if you know the Wealthsimple brand, and people see the beautiful TV ads from award-winning directors, Super Bowl ads, and they have the sleekest brand, and then I came in, I was like, yeah, I'm just gonna like shoot myself and tell people to download the app, or like make stupid meme ads around like, can't believe the stock of Air Canada is the price of this salad, and these ads would like perform 5 to 10x, and then it just sparked like a whole conversation. I had to do everything under the radar at first, because they would never approve that. But as soon as you can sneak one of those in a campaign, and you have like the CAC that's like 3x better, the brand team will want to shut you down, but the leadership team will be like, hey, wait a second.
But it's working.
And then you kind of try to find a way that work for every team.
Right on. Yeah, that's great. There's a question about sort of like losing money, but you can reframe it as, oh, we learned that didn't work, right? I was wondering if there's sort of like a minimum viable paid strategy. Like, is there a hard and fast number that I know this is like it's impossible to give the number, but like, do you have any frameworks for figuring out like how much we should put down over how long of time, based on what we know about our product currently, to learn a certain thing, and then we can move on?
I mean, I think I said earlier, per channel, again, with my little framework, like 90 to 180 days. If I put a number, I'd say like 10 to 25 grand.
Total or?
Total, yeah. I don't like one thing I think that I have to remind a lot of founders, especially because, the founders and growth people tend to be very numbers and data, is like, I've seen lots of people, both founders and growth people, get more excited about testing and learning than about something being successful. And I'm like, hold on, we're here to make money, right? We're here to grow a business. Like, if you have an idea, like someone's like, well, let me hold off on doing that because I want to test to see, is it this or this? Is it the creative or the channel? Like, let's run the same creative on Instagram and TikTok. And I'm going, And I'm going, wait a second, like, do you think it's going to work better on one? They're like, yeah, it's going to work. I'm like, well, just do that. If it works, we can always reverse engineer why it worked. But like, especially early on, like you're trying to get a vein, right? You're trying to poke a vein.
Yeah.
You're not like, let me poke here and see which one more blood comes out of. Like, you're just trying to make it work. And so it's a bit important reminder that like the point is not to test. Testing is a means to finding stuff that works. So if you can just find something that works, yes, you will test in the future, and that's part of the growth. But like in the early days, man, just find something that works, right?
Yeah.
If after 90 or 180 days of that level of effort and energy doesn't work, it's like.
I think, yeah, maybe one way to think about it, because it's hard to say like a definitive number of like minimum spend required. It's like how many, I don't know, if you have an item that's $100 that you're trying to sell, like I would spend at least $1,000 to see if I can sell one. If you can't sell one with $1,000, then you know you're in trouble. But if you're selling like something that's way more expensive because you're a B2B service, then you might need a bigger budget to try out the viability of paid channels. And if you are trying to get app installs for a game where you know like over $5, like it won't work, you know, you will know pretty after $500 or $1,000 if how many downloads you'd get. Yeah.
Okay, sweet. Well, maybe we can like apply. This question might not work. We'll see. We'll see how it works. But to kind of put this in perspective or to practice, if you had $5,000 to acquire 1,000 customers, what industry would you choose? And what would those first couple steps look like?
Say it one more time.
5K. And then 1,000 customers.
So that's a $5 CAC, right? So I think you can eliminate a bunch of industries, especially with the costs that we're seeing across paid channels right now. I can go
like
for
mobile
just
downloads or emails. Like I'd probably try to get email addresses and then monetize them in some way over a period of time towards selling information services, or that's kind of where my head goes. Like so you get them $1 an email with the hopes that 20% sign up for my paid newsletter about volatility prediction in using Wealthsimple to both trade stocks and do Facebook ads at the same time.
Right.
For $100.
Yeah.
I would probably pick an industry that's already growing organically, which is kind of a dirty secret from, I think, experienced growth people. Like it's a virtuous circle for your career when you get a little bit of experience. I think like the first couple of years can be like really tricky because you're working for like a small company that has no real growth prospect, and like you have to grind, or you're really lucky and you jump like on the rocket ship from the get-go. But as soon as you have a little bit more experience, then you can kind of pick and choose either your clients if you provide a lot of great services, or the next company you want to work at. Like I joined Wealthsimple, they were already blowing up because it was a pandemic and everyone was like bored and wanted to trade stocks. And I was able to get the job because I had that experience at Hopper. And so makes me look better and better as a marketer in my career because I can pick the companies that are growing anyway.
Right. Follow up. How do you identify industries and areas and that you would be interested in seeing how they are growing? Do you have any tools or like resources that you keep an eye on?
I mean, I'm seeing what everyone else is seeing, right? So industries that are growing. So right now, crypto and fintech is having a boom. And then during my interview process, like I'm trying to figure out to get access to some kind of data, or at least like get the information from the people I interview with to know the trajectory of the company. And you try to get like a little bit of insider knowledge that's not public. And so you know really how much that job can be worth and how much organic growth they're experiencing. And you know your life is going to be much easier. But yeah, so I would say like I would pick an industry that's already organically growing, like crypto right now. And one way that's like super effective for me when I'm thinking about like a small budget and trying to acquire people is just offering incentives or discounts. And I know it's like it gets a bad rap. But like, if you want to sell flights, just be $1 less expensive than everyone else, and people will flock to your app and try to buy your flights. Because especially with like commodity products like flights or investing services, it's also kind of a commodity. And you can't do that because like contractually you can't sell at a cheaper price than the airline, but then you create carrot cash and a wallet, and you can give like $1 back when someone buys their flights. Or for Wealthsimple, like we give a free stock when you get started. So recently the best performing creatives that we had was a free 100 Dogecoin when you start. And I guess right now would be like a free 50,000 Shiba Inu if you sign up for my crypto app, which would still be just $2.5. But you see the ad, you're like 50,000, like
Yeah.
the click-throughs are through the roof. And people will say, well, people take the money and run. Well, yeah, but figure out what share of, like, I don't care, I know that, like, but figure out what share of these will take the money and run, and know that only the rest is your customers, and look at your retention, look at your monetization, and then look does it make sense with your return on investment? What I find really crazy sometimes is that the finance teams and product teams will be very against giving money to the users, like a promotion that's easy to game or something. But I'm giving $200 to Facebook to waste a ton of impressions and people who don't become clients. I'd rather give $200 to $20 to 10 people, even if only 3 are going to become long-term clients. And yeah, I don't know, incentives has become like one of my favorite channels to play with.
Do either of you like play in the retention? Like, is it worth using ads to retain customers, or is that kind of just like beating the horse? Like, I don't know if that just came to mind. Like, if people are going to churn, like, should you be spending money or should you be using a free channel like email?
We've tried it a few times in different contexts, and I'd say there's certain business models that lend itself to it. It can't just be like, please don't leave, right? Like, what are you going to say? Like, there has to be, like, maybe in Simon's world, showing them a new currency or something could be the thing that triggers. A lot of it starts with customer behavior. So we worked for a big OTT company for a while at Ampush. We still work with them, and similar to Netflix, they had the kind of classic, the algorithm that led to retention. Right. And there were basically three things that if any of them happened or multiple of them happened, the person never churned. And they were, did they find 10 hours of content in a month? Do they watch 10 hours of content in a month? Do they find 3 unique shows? Or do they sync multiple devices? Right. So now you go, oh, okay, well, I know the 3 things that are going to make this person stick around forever. Great. Like, yes, I'm going to run an ad a month later saying, you liked this show. Why don't you also watch this show? Because I know that kind of thing, and for meal kits, it's come up, which is like there's a similar algorithm for meal kits, which is like different types of recipes or different frequencies. And so once you can figure out what actually makes a business retain, then you can start to try to drive your users to those behaviors, which will hopefully lead to overall higher retention. But you can't. I mean, we can't run a month. The other place this shows up, Stuart, that's interesting is in like large multi-SKU businesses, which is not the traditional subscription, but we see a lot of value in like a business that has 500 SKUs, especially like events-based businesses and stuff, where you have the customer already and you can run them a different SKU and you can see quickly what gets a high click-through rate and conversion. And that can be a very powerful driver of incremental sales or the equivalent of retention.
Yeah. I mean, I imagine Wealthsimple has exactly that because it's kind of a line extension. Like, I recognize the brand logo, but this app does completely different thing than the current app I own.
Yeah, I mean, it's a huge area for growth for us. Like, we're reaching almost 2 million clients. The big banks have 10. So eventually we're going to run out of Canadian adults to sell our services to. So we have to go into cross-sell. That's why it's a big development you see in fintech, but also in a lot of DTC brands and other services eventually realize like adding more products or better monetization is your best way to growth. Paid for retention, like, I've never seen it work really, really well. And like you have to probably do notifications and emails first. But I will say, like, if you can find your top 2 or 3 or 5% users, if you are in a game where you have whales who drive, like 1% of users drive 80% of the revenue, you definitely want an audience of those users. And if one of them laughs, like, go knock on their door, like, or like show them a Facebook ad. So that's when paid can make sense. But also right now it's going to be harder and harder to isolate the IDFA or the email of these users and like find them on Facebook. And so it's going to be really hard to serve granular messages to specific audiences. So I wouldn't overinvest in a program like that moving forward because of all the tracking restrictions.
Yeah. How, like, I'm not in an ads account day to day. What are some of the things that seem to be working? I don't know if you experienced any downturn when the privacy kind of flipped over, but I was wondering if there's anything there that you are seeing as at least useful to the founders you work with, or internally in your ad accounts.
Yeah, I mean, the biggest thing that we've been suggesting and seeing that works well across, partners and companies we invested in is just consolidation, like less ad sets, and letting Facebook figure out a little bit more where to show it. And I think what's happening there, this is mostly somewhat data-driven conjecture, hypothesis. Like, if I used to say, 30 to 35-year-old women, and 35 to 40-year-old women, because of IDFAs, it doesn't really know who's who anymore in the same way that it used to. But what Facebook does have that they don't really surface for people is behaviors. So they do know who's stopping to watch like a cooking video, or who pauses to look at stonks and what the latest whatever is going on there. And so if you widen the targeting parameters and let them figure more of it out, they can use the signals that they have, which they don't generally share broadly, to find you better customer signal. So that's kind of one of the big things we've been seeing and changing in the way we're running certain things.
Mm-hmm. Any like, have you rethought first party data? Like, have you added any type of like kind of behavior mechanisms within your products, or like recommended that they add sort of like kind of capturing this first party data so that you can use it in the future? Has that changed any of your thoughts around that?
I can't think of a way to do that. I mean,
yeah, for us, like that was my first thought when Apple announced that they would nuke the IDFA. It was like, well, I don't really care, right? Because everyone buying on Hopper like has to put their email address in, and I will just like share the email address to Facebook, and they'll figure out if that person clicked on one of these ads recently. But the problem is that the Apple policy, like IDFA is just one thing because they own that identifier and decided to get rid of it. But the policy is like you can't use personal like ID data, and you can't share it back to an ad platform without getting the user consent. And that's not just the IDFA, that's the email, that's the phone number. So I know like a lot of people are just still doing it, and there are a lot of like tools and vendors that still will like use fingerprinting to identify conversions, or tell you like, give me your email, I'm gonna pass them back. But like that's a risk that Apple could like shut them down, shut you down, and like you can still probably make it work for 6 months to a year, but I wouldn't bet on trying to get more PID to better track your ads in the future.
Right. Yeah. All right. Last question, then we'll wrap up here. Just wondering if there's any tools that either of you use in your tech stack that you kind of love using. We're all about like the nitty gritty specific stuff. Like, are there any tools that you just like you use daily?
Jesse, what are your tools?
There's a lot. I mean, Superhuman, I don't know, Google Calendar, Twitter, more like arcane stuff. Like, I'm a big fan. You were asking earlier about like intelligent stuff. Like, I like SEMrush and SimilarWeb a lot to get a good sense for different sites and their traffic.
Anything on like the creative side, or like seeing what like kind of
I use the Facebook ad library all the time. Like when I jump in an interview with a candidate, I'll just like really go on their Facebook ad library, share my screen, and say like, "Oh, did you make this ad? Like, how does this perform?" And have a conversation. Super helpful. I use one of my favorite tools is Figma. I was like blown away when I moved from Sketch to Figma, and I require that everyone in my team be able to use Figma. It's really simple, very intuitive, and I want my user acquisition team to be able to make their own ads, make edits themselves, change the copy, the colors if they want to. And then what we started to build is custom plugins on Figma. So let's say we make like 50 ads on Figma, we can select them and like send them directly to Facebook ads or Snapchat ads, Twitter ads via like a small API connections, because uploading creatives is like the worst use of time, and you see the Facebook spinner and you want to die, and like processing video. So we created like little tools to do creative uploads that are really nifty.
Very smart. Well, we just had Tony from Figma in the last session, so we're all well aware of how good Figma is now.
Awesome.
Awesome. Well, thank you very much, the two of you. This is really great. Where would be the best place for people to learn more about your work and follow up if they have any questions?
Yeah, I'd say there's two things. Like, one, follow me on Twitter. It's JS Pujji. There's two J's, not one like here. JSPUJJI. And then one tool, just to plug it shamelessly. You know, I started this company earlier this year called Growth Assistant, and I'd encourage all the growth marketers to take a look at it. We basically get you people in the Philippines who can take on stuff like uploading your ads and all the rote, manual, annoying tasks that you don't want an in-house team working on. They're part of your team, so it's not an agency. They're just like additional cheap labor, basically, to help with all the rote tasks associated with growth marketing. And it's a tool we use. We have like 5 of them here. Ampush has a team of like 50 of them, which is where we kind of originally came up with the idea, but now brands leverage it. So that's my plug, Growth Assistant. Go check it out.
Love it.
Yeah, thanks for Jamie. You suggested Adbox in the comments. I've been trying to find a tool to send me like Facebook ads or even other ads for free. So I'll check it out. Sorry, Stuart, what was the question?
You got the stage. You got the stage. You got the stage. So is there anything you want to, you mentioned you're recruiting right now.
Yeah. That's, it's really hard. The market is really tough right now, but yeah, if you want to join the financial revolution, no, but like seriously, I think Wealthsimple is doing something really exciting right now. We're going after the 5 big banks in Canada, and I was looking them up. On average, they are 172 years old, and that means that in almost 200 years, no financial institution has been able to get even close to the scale of these guys, and we think we have a real shot. So it's once in every 200 years opportunity. And I'm building a dream team of growth marketers who are very creative, and yeah, so I'm hiring for a director role and a bunch of growth managers. So hit me up on LinkedIn or check out our jobs page.
Amazing. Well, thank you so much. This was great. As a not daily ad person, I hope I didn't ask any too dumb questions. So appreciate you guys taking the time and walking me through that. That was great.
Thank you so much, Stuart.
All right, we'll see you backstage. And everyone, we've got one last session. Stick around. Adil and I are going to share some really deep kind of growth tactics that we've picked up along our time, and this will be the last session of the summit. So hope you can make it. That's starting in 2 minutes and 46 seconds. Thanks, guys. We'll see you.